here. So minimizing your drawdown is definitely going to be have everything to do with where to put your stop at once you're into a trade. Well, I'm not saying once you're into a trade. Before you even get to a trade, you get to know where your stop should be at. So before I got into that trade, I know if price broke back above here, this green, right, this green, close with the green candle to the upside, my stop is either going to be right below it, which is only 4 ticks, which is not enough room for me. But so I'm going to put it in. I'm going to put it right below the area of support, which is the swing where price started breaking back in the structure, which is going to be right here at 41.45. Even at that, you know, if I got in at the close of this candle here for 41.47.5, back down here to 41.45.5, that's 2 points. We're talking 8 ticks. Okay? We're talking 8 ticks drawdown. Okay? That's not much. Most people incur a whole lot more than that, you know. So that's to me, that's where, you know, I know I need to exactly get out at so that I don't incur much drawdown. Now, price is moving sideways right now. So hopefully that makes sense to you guys. That's just a way of knowing how to curve any kind of major drawdown. And the key to that is knowing where to place your stop loss at and where to take your exit, meaning where to take profit at. Okay. Hey guys, welcome back to the channel. This is Future Trading with Mike, and today once again we're taking a look here at the E-mini S&P 500. That's the ES. I'm a futures trader, so that's what I pretty much trade is this particular market each and every day. Price action trading is the way I trade. You know, I don't get so much involved in a lot of different technicals, whatever the case is. I like to keep my trading simple, so I simply like to look at price action and follow price movements. But you know, bigger than anything, I'm a supply and demand style trader. I like to look to see if price is either in a area of supply or demand off the higher time frame or my anchor chart, and then I trade based on rejections or based on retracements or rejections based on pullbacks to certain areas or zones, levels, whatever the case may be. But I have tons of videos on the channel showing how I trade. So I particularly scout the market each and every day to accumulate a size of ticks, which add up to be points, whatever the case is. I'm not concerned about, you know, the overall you know, dollar amount, whatever the case is. Of course, you know, we all are checking our P&Ls, but the thing about it is that I'm all about, you know, being tapped into what the market is actually doing and not so wrapped up into and get involved with the money aspect of things, because the fact is that's where the emotional side comes from. So I like to look at things. I turn off the dollar amount and I look at like ticks and points, because in my mind that's what I'm looking for. I'm looking at how many ticks or how many ticks I can get out of each trade or whatever the case is. So before I even take a trade, I'm looking at a certain area. I'm looking to see if I can execute at that area, and I know I'm looking at it, you know, how much room I have to execute that trade to where knowing where I need to get in at, get out, just in case price comes back against me, but also where I need to get out as far as like taking my exit profit. So, you know, that's how I look at things, guys. I'm not wrapped up into the dollar amount of something. Okay, so hopefully you understand that. But yeah, let's move on. Again, I'm a price action trader. My style of trading is really based off of supply and demand zones, and that's what I look for. What you see on my chart is a 60 range chart, and I'm looking. You know, of course, we're looking at the price action from yesterday, which we'll get into that here in a moment. A little late trading today, so 10:30 right now, so the market's been open for an hour now. Other than that, I want to thank everyone who's currently subscribed to the channel. Thank you for subscribing, guys. And if it's your first time watching, hopefully we can, you know, I can get you. Well, not I, but we as a team, I say that here on the channel here, can get you to join in or join the team as a subscriber and join the channel here over at Future Trading with Mike. Appreciate it. I would definitely appreciate it. So go ahead and watch the content. My style of trading may not be for everyone. I'm not a positional swing style trader. I don't sit in my trades for, you know, for minutes on end or whatever the case is, or hours on end. I'm in and out, guys. You know that I'm in. I know where I'm gonna get out at, take my profit. I move on to the next setup and see if we can execute on that. So yes, if you're first time watching, please take the time to watch the content. And I dropped some good videos yesterday, especially the one video covering a full tutorial on supply and demand trading. So I gave a good example of price movement to a demand area off the 12 range chart and what you should be looking for, you know, from start to finish. Okay, so step-by-step full tutorial on how to trade, how I trade, and what I look for when I'm trading the ES. Okay, so without further ado, let's go ahead and jump into, I don't know, it's like maybe my audio and the video may be off a little bit, so please forgive me if it is. But looks like my mouth is, I'm talking and you can hear the audio quicker than the reaction of the movements of my mouth, whatever the case is. But I don't know, and maybe I need to restart my computer or whatever the case is, or maybe it's due to a couple different apps that I have running on my machine right now. So either way, let's you can still see me, you can still hear me. That's the good thing about it. So let's go ahead and take a look to see what the market did yesterday, because it did rally back up after the Fed announcement yesterday at 2 p.m. The FOMC yesterday. So this is around somewhere around that time here. It kind of got a little choppy. Price moved down a little bit, and then we shot up. Okay, so a lot of buying came into the market. You know, if you guys don't know much about how the market actually works, or whatever the case is, you know, we as me, you, other traders, we don't push the market. You know, we don't push it. We don't move it in any kind of direction unless you have a lot of money. You know, have a lot of capital. It's the market makers, the institutions, the ones that actually push the markets, guys, and what I call what happened yesterday, the market pushing higher. It was basically institutions shopping for stops, market makers shopping for stops yesterday. You know, driving the force of the market up. After the Fed announcement yesterday, of course, we all know that if you pay attention to what happened yesterday, we got another interest rate hike of a half point. So things, you know, kind of the Fed announcement or Fed report was aggressive, was hawkish in a sense, but it's in turn, if you don't know anything about economics, really need to kind of learn I say more so the fundamental side of things, more so, you know, what economically happens, because things that go on economically in society, I mean, in the economy, affect the markets greatly. Okay, so and you know, we have, like this week we have some major news events. I think today we had unemployment. Tomorrow we have non-farm payrolls tomorrow, and yesterday was FOMC. FOMC is always, that is the most important you know, economic news event or whatever the case is. And you see what it did. It pushed the market, it drove it higher, enforcing, you know, those that were short sellers in the market, forcing them out of their trades, meaning they had to close out positions. And how do you close out a position if you're short? You're going to close out the buy position, that opening gaps back up into the market, or open up, it put money back into the market to push them, to drive the market higher. It gave the exponential force to push the market higher. Okay, so hopefully you guys understand that. If you don't, then you need to spend a little time on homework. I believe I'm going to try to put together a video today, do a short video today, you know, kind of talking about what took place in the Fed announcement yesterday and what was expected, you know, once the release came, or once the conference was, you know, once the statements came from the Fed chair yesterday, the Powell yesterday, and how the you know, that release of talking about the interest rates and what the Feds were expecting, or how they expected to get the economy back on track, how it impacted the market, and you know, with when things are kind of positive and the Fed start talking hawkish sometimes about things, it tends to have it always has you know, has an effect on the market, whatever the case is. In yesterday's standpoint, it drove the market higher. And as a trader, when things like that happen, especially when you look at the overall market in a sense, and seeing that over the last month we've been, you know, making lower lows and lower highs, these major pullbacks have just been pullbacks, you know, been basically the institutions, what I call shopping stops, trying to stop traders out, whatever the case is, collect the money that, you know, they have in their account based on, you know, the positions that they put on in certain areas, whatever the case is. That's their nature of the goal. Their goal is to stop traders out. That is ultimately their end goal, is to, that's how they make money. The same reason of why we trade each day, to make money. That's their goal. They can see your stops on the order books. They can see where I say where large orders are sitting there, and they're going for for that bag, for that account, those accounts, to stop them out, and then they're going to drive the market back in that same direction. So it's a mental. Trading is very mental, guys, because it could, you know, it can really mess with you mentally. if you don't really know how to trade correctly, like to me, when I saw these major pullbacks, like right here, testing the area, especially these major support areas, or supply areas, whatever the case is, I knew what was going on there. Market racing back up just to push back lower. Market racing back up just to push back lower. Market racing back up, plateauing, or excuse me, not plateauing, but hitting an area of supply here just to race back lower, made a lower low. Then yesterday's announcement, we moved sideways for about 2 days. Yesterday's announcement, price pulls back, boom, we hit in the same area of supply, same area of resistance, sitting up here, the highs up here. Now the market's driving back lower. And it's probably, it more likely may come down here to retest this low right here and then drive back lower, okay? So in this type of environment where we've been seeing lower lows and lower highs, these have just been major pullbacks to drive the market back lower. And that's what it is. A lot of people, what they'll do is they'll probably start buying, thinking that the market's going to push up. I'm not saying the market won't have a chance of, or may not, that it may not, or what am I trying to say here? That the market may try to push higher. It could definitely do so. Okay, got a little tongue twisted, but I'm trying to explain this pretty quick so I can jump into my trading, guys. But I mean, yeah, we have an area right here. There's a lot of support right here, right? So price could hit this area here just to push higher. Now, the thing about it is, when it pulled back here, supply, boom, once, push down, boom, resistance, area hitting here, same area supply, two. Drove the force back down to the downside. Pulls right back up here. Did it close above? No, it did not. It bounced again. The market, it drove the market right back up to this area here at 4,300, just to drive the market back down lower. Okay, so if you got into this trade up here and you noticed the rejection, which would have been early part of this morning around the Europe session, London session, I'd say, then you would have done very well with going short. Okay, so, but those are individuals who know about what's going on in the market. Okay, now I'm not the type of trader to sit in a position and let it ride, whatever the case is. I like to just overall know which direction I should be trading, and sometimes you can trade both directions, just depending on your style of trading. I'm a scalper. And like I said, I like to see price move into an area of supply and demand, which typically right now we're kind of in that area. I mean, price pushed up here, retraced back, moved higher, pulled back, moved higher, making a higher high, pulled back. It just kind of started stair-stepping to the upside, pulling back into this area right here, the tops, hitting these tops of these highs right here, back into this little area of supply again in this area here. We still have not broke above 4,300 at this time. A little bit above it, but when I say break above it, I mean a candle close to the upside on a 60 range, okay, chart. So price is dumped back lower, which to me was going to be expected. All this selling. Now I'm gonna tell you right now, if price comes back up to this area right here, there's a major area of supply sitting right here at 42.68. All that aggressive selling to the downside, even this selling right here, pulling back to this area, maybe in this area here, but be careful because if price pulls back to around, say, 4,200, we're in this low volume area off the higher time frame, so be careful there. Now, price is in an area what I would call, or say more so as an area of demand. You see it rejecting there now, so now I need to be looking at my 12 range chart to see what's going on because we've already started to break structure back to the upside, okay? So a lot of rambling, a lot of talking, but hopefully overall it helps some individuals to understand what took place in the market yesterday and what to actually expect to happen or possibly expect to happen in the market. Now, I said that we're either going to do two things. Right now, we're on a wedge in the higher time frame. Okay, we're wedging right here on 60 range. Now, we're either going to do two things. We're going to break lower or we're going to push higher. Well, of course, you know that. The market can either go up or down, right? But being we're at this major area of all this support right here, we can project this to finally break 4,300 to the upside. And if we break that, then we can see, push maybe in the long run all the way back up here to say 4,390, 4,400 area. At price, that's 100 points right there. So we'll see. I'm not saying it will. But right now we're moving sideways in this wedge. So let's see. All right, let's see what happens here. Okay. And in this video, today I'm trying to show you how to kind of get questions about knowing, I guess, about stop loss placement, position, whatever the case is. I'm going to show you a lot of people. I see a lot of people want different. Okay, let me pay attention here, guys. First of all, let me pay attention. Then I'll start talking about that. Where am I at? Okay. Yeah. Okay, so the market probably didn't pull back to this area yet. So okay, we are rejecting some areas. Um, hmm. It could push lower now. Definitely push lower. So overall, you know, I would be saying your best interest is to be looking at short entries. But right now we're moving sideways. We're in this wedge on the higher time frame, and we're just trading within this leg right here. So be careful when you see those type of things. We're down here back to the low now, and I'm gonna pause here. Actually, let's see here. Uh, my computer froze up a little bit here. What is going on? Okay, I'm long, but I'm not sure what's going on here. Sorry, guys. Took a little long entry. I took it a little too early. What's going on here? Some funny stuff going on here. So let me be careful here. Yeah, I'm gonna scout this real quick. Get out. Come on. Okay. All right. First little trade there. I went long a little early. Um, not sure what happened on the dome. Then the trader kind of stalled out. I'm not sure what happened there, but let me see on my oh, that's the market analysis. Sorry about that. That's not what I want to look at. I want to look at trade performance and kind of see what happened. Come on, man. I swear this thing is acting funny today. Guess I better wait on that. Let's see. Okay, the market's pushing lower. That was a quick little bounce on the long entry, but like I said, the opportunity to be really be mindful about shorts because we are in that type of environment. Yeah. Okay, that was kind of a scratch trade. I mean, 6 ticks there, but something happened with my dome, and I was getting ready to close out. Looking at the markets racing lower. Okay. We down here at this low here, this swing. I'm not gonna say little, but swing to the upside here. So let's be careful here. Yep. See all that buying that took place yesterday. When the market rallied yesterday after the Fed announcement, shot down here, then it pushed to the upside. So I'm in a big swing to the upside here. So um, yeah, the market actually moved up. Let's say 4,200. Moved up about almost 100 points yesterday. Rallied almost 100 points after that announcement. Look at it. The market is it's volatile right now, so I'm going to kind of wait to see what it does here because I'm not going to be foolish here and just start jumping back into trades. We are hitting this off this area down here, the bottom, these lows here. So, um, uh, okay. Sorry about that, guys. The market came up here, it rejected this area here, and it shot back down, testing the lows right here. I'm trying to see what's the market's trying to do here. Yeah, let's see. Mm, so we are testing. Let's see. Um, Okay, the market, I am long. Okay, I think we're going to come back up and test 60. All right, second contract right there. There we go. Okay, we just got filled. All right, I think we're going to come back up here and test around here at 67. Okay, so I went long there. Okay, picking up 14 ticks right there. All right, let's see. Where we at? 67, like I said. Okay. All right. Okay, we're trying to break higher now, right? Okay, this is where I need to pay attention here. The market's really racing right now, so I need to really be pay close attention here. It's moving pretty quick. Yep. Let's see. It's probably gonna come back down. Keeps rejecting this area, guys. Mm, short and late though. Okay. Hopefully we come down here and test the lower areas where I'm at now. Price is at. Come back down here and test this area down here. I'm in for a short here. Come on. Oh, it's rejecting the area 62.5. Let's see. Come on. Maybe it's not done. Come on, come on. Push lower. I didn't think it was done yet. Oh, no, no. I want to see it do that. Check this area here. Expecting it to come back down and push back lower. Point there. Come on, push lower. Okay, first contract. I'm gonna go ahead and take out. Pull it back. Come on. Okay, all this bouncing around, I'm taking out. All right, the market's pushing higher, so um, let's see. Yeah, let's see. Let's see. All right, it's projecting this area up here, and let's see. See what happens. So it came down here, it's low right here, bounced off of it, started making these little higher highs and higher lows, breaking back into structure right here. So um, let's see. It's like it may be trying to break lower. Maybe trying to push lower here. Hmm. Yeah. A little short. Come on. Failed, come down this area down here. Okay. A little short entry back down to the lows. As I mentioned earlier, the possibility or the options are to really go short today. And looking at the market, okay. Now it's bouncing here, huh? Okay. See what it does. See what it does. Hmm. Hmm. See if it's going to push lower, if it's going to try to push up now. It's moving sideways. Got a little high here, a low here. Wedging in this area, this high volume area. Maybe it's going to try to break higher. Market's moving sideways in this area, so we're definitely a wedge. You look at the higher 12 range chart. Wedging in this area. Looks like we're going to try to break lower now. So, yep, there we go. All right, breaking lower. So yeah, like I said earlier, taking shorts is the really more so what you should be looking at doing. I knew this was going to happen, looking at what happened at the following the action of the market yesterday after the Fed announcement, but driving the price up, and then following suit, just kind of paying attention, and then eventually folded. And when I saw it rejecting back up this area here, I knew that it would sell back down. But we're in this area here. The thing is, are we going to push lower and drive down to this area, back down to the lows from, it's like the 1st of May. So, I'm long 41. Come on. We can pull back here before it pushes higher though, but it's okay. Long a little early here. Looking for price to come up and test this first little swing area right here at 52.5 pretty much. So we'll drop this down a little bit. Price can pull back. Expected it will. Okay. It's okay. That's what I'm looking for. Okay. Come on. Move up. There we go. And I probably should take out here. All right, right here, back up to the high right here. All right, so I'm going to discuss that trade there, and I'm going to use this as an example of what I want to talk about earlier about curving. I see a lot of people who trade online and they take a lot of drawdown, right? Let me see here. Give me 1 second, guys. Market didn't break this high right here, but taking a quick little scalp here. Okay, quick little scalp. Okay, back into the high again. So I'm going to discuss that entry right there with you and let you know why I got into that trade. So what I wanted to talk about was, how do you curve your, any kind of major drawdown? I see a lot of people get into the market, and I mean, they put on these trades and they allow the market to come back against some significant amount, and I call that like a major drawdown. So how do you curve that major drawdown, and it's all about, the key to it is all about knowing where to place your stop loss at, where to place your exit point at, basically having a strategy, knowing where, once you execute and get into a trade, where you should be getting out at and where your stop loss should be exactly at, so that you do not incur any kind of major drawdown. All right, so I'm gonna talk about that in reference to the trade I just took. Okay, where I should have, I executed a trade where I knew the moment I got in where I needed to get out at, and I knew exactly where my middle stop loss is at. The stop loss, the area I know that I do not want to see price break back below, that's my limit, or I hit the close button and get out. Okay, so I'm trying to follow through with this trade right now, kind of see what's going to take place here. So we could come back up and test. Actually, let me take a look though. Yeah, we could come back up and test, come back all the way back up here to 58, possibly, but we'll see. The market could try to break lower because it just, let's see, has it made this? Yeah, it's broke that area. Let me see something. Look at the higher time frame. Yeah, but we could push lower, but we could also push all the way back up here right now. Okay, so let's see. Okay, we're rejecting that bottom again. And the market is going to more likely push up here. I got into the trade to a little too early there. Should wait for the pullback here, but it's okay. Here we go. Push up. All right, getting out. It probably will come back up here to 52, 51, 52 area. Test that area. Where we at? 50 and a half, pretty much. Maybe a few more ticks to the upside here. There we go. 51, 51. Okay, like I just said. All right. So let's talk about that trade entry. Why I got into it from the beginning. Okay, and there it goes, pushing higher. And I knew that it would push up higher. And what did I say? We're at 454 right now. We probably may come up a few more points and test this area right here. All right, well, let me go ahead and talk about that. Let's look at the 12 range, okay? Price kept chopping to the downside, okay? I started looking at my 60 range, and I wanted to see, was there any areas, a good area of support, particularly more so an area of supply where price could actually reject from. And I noticed this area down here at the low of this swing right here, okay, where price pushed up, pulled back, and then pushed higher. A lot of buying came out of this area. Now it did push up, move sideways, which means the sellers and buyers are fighting right here, and then there was just more buying interest in this area, and price pushed higher. So this to me is an area of supply where price could move back into, which it did on the way back down, taps right back into it, right to the tick almost, and what does it do? It bounces, starts rejecting. Now, I always say you want to see price, we see structure broke to the upside, right? Okay. Did it start breaking structure to the upside? Yes, it did, but I want to show you something else too, because it did push up here, pull back, and break higher just to pull back here again. Now it's just pulling back now, okay? So it is making structure or to the upside, okay? But one thing I did notice in looking at my 12 range, where this red line is at, this red line right here, this was where price pulled back into an area of support off the 12 range, okay? So if we look to the left-hand side of the chart, and when I say support, I really, more so this is an area of demand, because here it is. This was from May the 4th around 11:45. Area demand sitting down here, okay? See it right here? Where price pushed down, turned around, pushed up, aggressive buying, okay? It broke back into the structure here, okay? Back into the structure where price is swinging to the downside. So this is the area where I need to put my line at, because I want to see price stay above this area. Price comes back to that red line. Now we can shift back over and look at the 12 range to the right hand side. And what do you see? Price came back down to that area, pushed up, pulled back. So it started rejecting this area. When I saw that rejection taking place there, price moving sideways. This is where I started looking at my 4 range and started to see if price was making any kind of, or breaking any kind of structure to the upside. It did. It pushed up, pulled back, pushed higher. Boom, I went long here. It pushed up again. It retested this area again, stayed above the red line. I went long again here. And then, the same thing. You could have went long when it broke back above here. So those opportunities, even though price is moving sideways right here. That's why you always have to look to the left-hand side of your chart as well. So now the key is once you found an area to get into a trade at, and once you execute that trade, two things. You need to know where to get out at and where to primarily where your stop should be at, meaning where you should take loss at, or where your stop loss should be at. So you don't start incurring major drawdown. Where you take some type of loss, if you place a stop loss in the right area, yeah, it'd be small, minimal compared to you just staying in that trade with hopes that price is going to push back to the upside or downside, whatever the case is. See price hitting that area right there? Look at it. What did I say? I said price will come up there and test that 57 area, 58 area. It just did. All right. Okay. So let's take a look at this thing. All right. So once I'm into the trade, if I wouldn't have got into the trade right here, once this little W happened here, but I always say you want to see price break above the W, then pull back to the W to look for the entry. So here's the key: once price pulls back to the W, meaning I saw on the 4-range chart that it broke into structure on the 4-range. After I noticed the rejection off the 12 range, from looking at a key area of demand from that, I think I said May the 4th, was it? Let's take a look. Yes, May the 4th at 11:45 right here. Area demand, price breaks back into structure here. This structure right here, okay? And then it starts moving it starts moving higher, higher, higher. And all this is just a retracement back a few days later, which is today, back to that same area demand from May the 4th. Price starts rejecting off the 12-range chart. I'm looking over at my 4-range. I see the rejection. It breaks back into structure here in the 4-range. Pulls back to the area of support right here, which is an area, small area demand on the 4-range. The moment that green candle right there on the 4-range closes, I'm long, okay? And once I'm long, this is where I talk about the execution of the trade, where you should, once you execute a trade, where you should get out at. Always back to the high, okay? Always back to the high is where I like to take a trade back to on the 4-range, okay? So which means if I got in at 41.48, I'm taking that trade back up to pretty much 41.50, okay? Which is like two points, whatever the case is. But that I'm a scalp trader, and that's what I'm looking for. Now, there's always plenty of more opportunity on which you can actually make more ticks or for profit or whatever the case is. But most times I'm getting out here, and there's one thing that me personally, we're always learning, and we're all learning how to better improve ourselves. It's just I working more so on what's called a trailing stop. Meaning my last contract, I want to allow it to start trailing, and I'll talk more about that later. But for right now, let's talk about the execution. Once we're into a trade, like I said, my stop, not my stop, but my profit target area is going to be back up to the high right here. 2 points on 2 contracts, whatever the case is. Now, where's my stop going to be at? So that I don't take much of any kind of drawdown. Let's say I get in right here at 41.48, okay, or 41.47.5. My stop is going to be right below this candle right here, pretty much, okay? Pretty much right below that candle right there, because I don't want to see the price break back below that red line. So which means I'm only incurring about 4 tick stop if in this instance here. Now, 4 ticks is not much area, but if I'm looking to minimize any kind of withdrawal, drawdown, 4 ticks is next to nothing, okay? But really, what I probably would be looking at more so is going to be down here at 41.45, because really I don't want to see price break there. Because the reason why I say that, to me, I probably my stop right here is because this is the area price really started rejecting at before it when it started breaking back into structure back to the upside, meaning back into structure on the 4-range, and you see it making structure on the 12-range. So I talk about these things. I thought, kind of like in yesterday's video when I did the full tutorial, price trading off an area of demand as well. It's kind of the same thing here. So minimizing your drawdown is definitely going to be have everything to do with where to put your stop at once you're into a trade. Well, I'm not saying once you're into a trade. Before you even get to a trade, you get to know where your stop should be at. So before I got into that trade, I know that if price broke back above here, this green, right, this green close with the green candle to the upside, My stop is either going to be right below it, which is only 4 ticks, which is not enough room for me. But so I'm going to put it in. I'm going to put it right below the area of support, which is the swing where price started breaking back in the structure, which is going to be right here at 41.45. Even at that, you know, if I got in at the close of this candle here for 41.47.5, back down here to 41.45.5, that's 2 points. We're talking 8 ticks. Okay, we're talking 8 ticks drawdown. Okay, that's not much. Most people incur a whole lot more than that. You know, so that's to me. That's where, you know, I know I need to exactly get out at, so that I don't incur much drawdown. Now price is moving sideways right now, so hopefully that makes sense to you guys. That's just a way of knowing how to curve any kind of major drawdown. And the key to that is knowing where to place your stop loss at and where to take your exit, meaning where to take profit at. Okay. All right, so looks like we're trying to break lower. You can see it here on the 12 range. So I mentioned, guys, the opportunity is really to be more so is if you can, it's the opportunity you're looking for shorts, whatever the case is. Yes, I took a couple long entry stabs there. If you know what you're doing, you can do that. But that was off of the pullback to an area of demand where I saw price trying to break, and eventually did a break structure to the upside. Yeah, made structure to the upside. So. And I went for those stabs, okay, to go long. So now price is trying to break lower. What can we break into? You know, if you, hey, price is, we're wedging right now on the higher time frame. You can see it, okay. We're in a major area of congestion, I call it, okay, and we're down here at this low right here. So, you know, price breaks this and breaks this area here. I said this other day to someone. If price breaks 41.20, guys, we're going to see price come back down to the lows. Okay. All right. All right. I said that. Okay. So, all right. All right. So price is, okay, man. We're right here at the V-pot. So, yeah, it's rejected. It's still rejecting this area down here. And it's broke back above this red line that I have here. So, yeah. Okay. Yeah. Let's see what happens. May get a run to the upside here to test the high here, but well, probably get a pullback before that happens. So let's see. 29. Let's see. 11:29. Okay. Yep, I'm long. Okay, come on. There we go. Quick long to the upside, back to this area right here at 41.50. I knew price to bounce there. Back up to this little high right here. So what happened here? Remember, I said I want to see price break, stay above that red line. Okay, so there's some structure here that price broke back into on the way up. It broke back into it, pulled back, made a higher high here. It could have been right here on the pullback here at 11:30, pretty much 11:29. Price broke back above. There was an entry to go long right here. You could have went long here, but that's trading off a little micro level. But I waited for the pullback again, back to this area right here in this little swing to the upside. When I want to see price stay above 41.45. Okay, so this is what I saw here happen. I was playing it to you. This can be my last. That's gonna be it for me today. But yeah, price broke up, pulled back, broke above, making a high here. Okay, pull back, made a higher high. When price pulled back here, I'm looking for rejection. As long as it stays above, it doesn't break below this area right here of support, where there was a little swing sitting here. Take these areas away so you can see it. K, and K. As long as it stays above this little swing to the upside here, when I pull it back here, stays above here, stays above this red line, I switch over, start looking at my 4-range chart. Right here, 11:31. Okay, it stayed above, didn't break below. This was the area right here at 45. Okay, so it pushed up, pulled back, pushed higher. Okay, Price breaks back, closes green right here, go long. You can take it back up here to 51, 52 area, whatever the case is. That's where I'm getting out at. So you get in at 40, say 49, you take it back up to 52. So that's 3 points right there. So, and that's how I trade, guys. That's how I trade each and every day. Okay. So appreciate everyone who's tuned in and watching the video. If it's your first time watching, hopefully you found some value in the content, like I always say. Please be safe. Please be safe in the market today, guys. I'm not sure if we're going to continue to get some fall through to the downside. We are in an area, a bit of congestion here, and price could go either way. It could bounce out of this area, push up and make higher highs, or we test this high at least, or we can shoot down here and test this low from May the 1st. Okay, so that's all I have for you today. I'll see you in the next video. Actually, I probably will drop another video today. Maybe sometime this afternoon. And that topic is going to be more so. I got it written down here. Topic's going to probably be more so. Well, I'm gonna leave. I'm not even gonna say the topic yet, but it's going to be kind of surrounding what happened in the Fed announcement yesterday. So, if you guys don't know anything about economics, or how the impact of how the economic news events affect the markets, they have a major push and pull in the markets. You see that sometimes. You guys that have experience in trading, you see the markets kind of act erratic at certain times. Well, that's all as a reaction to news events, pretty much. Okay, so I made sure I drop a video today talking about the Fed announcement yesterday, and in regards to the increase in the interest hike yesterday and how that impacted the market. So what we saw. Okay, so stay tuned for that. Hopefully I'll get that out today, and I appreciate everyone who's tuned into the video. Take care. I'll see you in the next video tomorrow.